Welcome to 7 Minutes with Sevens Report. My name is Tom Essaye, and I'm the president of Sevens Report. Sevens Report is a market newsletter that thousands of financial advisors read every day across the country and the world. But today, I'm here to talk to you about the markets and about a much more volatile than expected 2025. So far, 2025 has been a major surprise for investors, as many of us believed that with the new administration, the market was going to keep the good times rolling and the bull market would continue. Of course, that hasn't happened so far this year, and actually volatility has exploded, and we've seen the biggest declines in the S&P 500 since 2022. Today, I want to talk to you a little bit about why that's happened. So let's take a look at 2025 in the markets. The market started with a ton of optimism. Right? We had a new administration coming into power that was supposed to be pro-growth, and we could expect deregulation and tax cuts. Both of those are good for stocks. We had very strong employment, which means the risk of an economic slowdown was very low. And analysts expected S&P 500 companies to increase earnings sharply. In the end, it was almost a perfect setup for stocks as we started the year, or at least so we thought. Of course, this is not the perfect year in the markets, and there are two main reasons for that. The first is uncertainty. The second, you probably know, are tariffs. Let's start first with uncertainty. When you're in the markets, uncertainty is enemy number one, and that can paralyze and kill a bull market if it lasts for too long. Look, tariffs and all the trade back and forth are certainly part of the uncertainty, but it's not the only part. The way Doge exploded onto the scene, and you saw all these headlines of mass firings, mass layouts, buyouts, parts of the government that people had become used to shutting down. Whether these are good or bad policies, we'll find out in the years to come. That's not the point. The point is that these headlines created massive uncertainty about what federal spending was going to be like. Was unemployment going to go up because all these federal workers are getting laid off? Would the type of uncertainty freeze business spending? All of that has weighed on markets throughout the entire year. And while we don't get as many headlines about uncertainty as you do about tariffs, it matters a lot. And here's why. Even if the tariff stuff goes away and we continue with this constant policy uncertainty around really fundamental parts of the workings of the government, the market's going to have a hard time rallying. They thought they had certainty when Trump was coming into office, and they have been totally surprised. Now let's move on to tariffs. Undoubtedly, you have heard about the tariffs, and I'm sure many of you have read about them. The market expected some tariffs from Trump, but much like his first term. There were tariffs, but they weren't really too far-reaching, and they didn't end up really impacting Americans' lives or boosting inflation. Meanwhile, even if we had some tariffs, as I said earlier, the economy was supposed to be strong, the Federal Reserve was cutting rates, earnings growth was really good. It would more than offset some minor tariffs. Well, turns out the tariffs were not so minor. And the market really began to worry about this in February and March when President Trump announced tariffs on Mexico and Canada, which frankly blindsided people, considering he negotiated the USMCA trade deal in his first term. Investors assumed that tariffs are just one big negotiating ploy. So Trump threatens a whole bunch of tariffs. These countries either make a policy change or buy a bunch of our stuff, and then the tariffs go away. That's kind of what happened with China in the first term. Well, it didn't happen this time. In March, President Trump actually enacted many of these tariffs on Mexico and Canada and threatened reciprocal tariffs that would come in early April. The fact that Trump went through with these Mexican and Canadian tariffs kind of shattered this idea that it's all a negotiation. Then, obviously, the idea that it's all a negotiation was somewhat obliterated following the much worse than feared reciprocal tariffs, where Trump applied a 10% levy to virtually all imports and much higher levies against our major trading partners, including China, who reached a peak of 145% tariffs. Now, Trump later paused these reciprocal tariffs for everyone except China, although the 10% stayed in place, and he exempted a lot of important product categories that we mostly import. And we've seen the market recover following those announcements. But this pullback is not over until we get some sort of resolution on tariffs. And linking back to the first cause of our market decline, certainty on trade policy and other federal policies. Have you ever heard of a mullet market? That's what some people are calling 2025. For those of you who are not familiar with it, a mullet is a haircut where you have short hair in the front, a little longer than mine, and you have a whole bunch of long hair in the back. That's kind of the way people were talking about 2025, because they knew there were going to be tariffs and potential trade war in the front of the year, the first half of the year. That's the short hair. But then everybody was expecting that tax cuts would come later on in 2025, and that we get deregulation that would really boost the economy in the second half of the year. That's the long fun hair in the back. Well, we got the short hair, but we haven't got the long hair yet. There has been no party because there have been no progress on tax cuts. And unfortunately, the whole tax cutting process seems to be stalled in Congress, even though Republicans control the House and the Senate. Currently, they are fighting with each other about how to structure and pay for these tax cuts. The bottom line is all the expectations of a party in the second half of the year haven't come true so far, and that better change if this market is going to rally. Now, what could make this all stop, right? What can get the good times rolling again? Well, luckily, the U.S. economy has proven very resilient over the past several years, so don't count it out just yet. But more specifically, markets need clarity from this administration. They need them to begin to act a little bit more standard so that markets can relax a little bit and investor sentiment can recover. And they also need to see consistent trade policy that explains to companies what the playing field is going to be for the foreseeable future, so they can then make decisions. Most people's reaction are going to be to just cut everything they can and hunker down. Cutting everything they can and hunkering down is what leads the U.S. economy to recession. In the end, this has been a surprise of a year so far, but the surprises can continue. And I know that many people are sort of negative on sentiment and worried about the market, and there are reasons to be so. But as I said, counting the U.S. market and the U.S. economy out has been a pretty consistently losing bet. So hang in there and pay attention to those headlines. And if you want more plain English analysis like this about the markets, go to sevensreport.com and sign up for your free 2-week trial.